Welcome to Talking Sense. If this is your first time here, please do hit that subscribe button. In today's video, we're going to be looking at two stocks, Thungela Resources and Exxaro, both coal-orientated plays. They've had a stellar year so far in 2022. I think Exxaro has returned between 25 and 40%, somewhere in that range year to date, where Thungela has returned over 200% in that time. Now, many of you are probably familiar with Thungela because you've had FOMO. Maybe some of you have owned the stock since earlier on and your gains are pretty high. So the question is, where do these stocks go from here? Where does the environment, the macro environment go to from here? What happens to the price of coal? So there's a lot of unknowns, but quality companies nonetheless. So before we look at the chart, you can see it in front of you. I've already mapped out what I think could potentially happen, and I'll explain my ideas. First of all, coal has gone down in price over the last month, 20%. So it's gone from over $370 a ton to just over 268. At its peak, it was over 400. So you can imagine the cash that Thungela was bringing in and Exxaro too. So they've paid exceptionally good dividends in that time, and I think they will continue to pay dividends, but they also might go into a bit of a more conservative role with their capital allocation. So they might not pay as much. So their dividend yields are quite high. Exxaro has come down a bit. Thungela is still up there. But like I said, their earnings might contract if coal pulls back. Then you also have the failing infrastructure of the railway roads in South Africa, where these businesses are affected by Transnet. So the amount of tonnage that they can export might be a little bit hindered or dampened by the infrastructure environment. So that's something to consider. Thungela is more independent from Transnet. So the Richards Bay exporting facility can probably handle a little bit of more of a headwind. And they've had a larger stockpile. So even after this period of strikes, I don't think their quarter four revenues would be that severely affected. So this leaves the opportunity of, if the price sells off due to sentiment, maybe a falling price in coal, and just the global environment of what's taking place. Now, it might give you a perfect opportunity to enter again. So before we look at the charts, just remember that this is not financial advice. It's just what I'm thinking, where I plot my price entries of what I'm looking for. And most importantly, I'm trying to stay patient and rational, sitting in cash, waiting for opportunities and nibbling where I think the best opportunities are. So in front of you, we'll start with Thungela's graph. You can see they've had that massive move up from early 2021 and have returned hundreds of percent. So it's natural for the stock to pull back and cool off. Profit takers, it's got to digest that move of rapid acceleration. It can't just continue to shoot up. If I had to change over to the monthly chart, you'll see what I mean. It's just like a rocket straight up. Like you can't even see, you can see that it's just literally gone straight up. So it's cooling off now, which is it's normal. But what you should be aware of is certain areas where if you miss the bus the first time, you might have an opportunity to get in at a lower price and build a position if you like the company. So let's have a look. Let's go back to the weekly chart. This is where I like to use it. So I've plotted, you'll see where the purple blocks are, points of interest, and points of interest are where you can see where the price reacted. You can see where the price rallied up, hit its head. You can call that a resistance area, pulled back down to a support area, and it was in this defined range where if you were a trader and taking advantage of it, you could have made a bit of cash waiting for the breakout. And we could see we had that resistance and then that final breakout. This is ideally where you would have been wanting to enter if you were a trader. After this breakout here, the second candle, you would have ridden that move up. And ideally, this is where you would have wanted to have exited. You can see over here, that's where you wanted to exit it. So some people might have been sucked in, continually thinking that it's going to go higher. From looking at the chart, it possibly could go higher. All right. There is a gap to be filled here, which you can see. If you go back to the daily, you'll see that gap more clearly where the price sold off very quickly. So there was no bids there at that price. The price just sold off, and that's what we call a gap. The price moved too quickly. So usually gaps are usually filled over a time period. So we might see it go straight up parabolic again, but from what I'm seeing is I'd rather play it on the safer side and wait for my predetermined zones because I think it's starting to roll over. Coal price might come down as it has been, like I said, 20% down over the last month. So we have to just take a strategy, a risk management strategy, and stick to it rather than FOMOing in and trying to make big bank. Or ideally, we all want to make big bank, but it would be a smart play to look at this sensibly. So if you were a trader, you can see we've got this trend line that I've drawn here. You can see this where the price comes down, bounces, touches again. So potentially where we are now, and it's also coinciding with this area, you see where we had that kick up resistance, that was the resistance, and then the resistance turned into support. So as you break through that resistance, we normally have a retest down into that previous resistance, now support. So this is the area where you're going to want to see Exxaro hold, and that's where you could potentially play a bounce, either maybe to refill that gap up if it does. But ultimately, let's say it does do that, we could still be setting a lower high. So even if we set that gap up there, all right, we could still be trending lower. So I think we've moved way too quickly. And I think we're going to see some more downside. And if stocks sell off globally, Thungela could be affected. So it's just something to take note of. I'm not here to predict what's going to happen, but more of a way to say, okay, this is the area where I would want to enter. Let's say I've got 50,000 that I want to invest. I'm not going to throw my full 50,000 now. Potentially I could expect a bounce here, maybe cash in some profits. Or if I'm not a trader, might take my first little entry here and then buy at predetermined areas. Ultimately, if this area doesn't hold, we're going to see lower 200s and potentially around about 170, 180. Ideally, that's where I would want to be buying. So the graph can change shape different ways. You just got to plot it and keep that in mind. So what I think will play out is, say, you see that trend line going down, that over here. So I think you can see it touches that upper end, sells off, touches the bottom. You could have a bounce. Now we have a potential, the bottom of that lower channel coinciding into a support zone where it's retesting down to an old resistance area. So that's why I say we could see a bounce, and we could see a bounce of 10, 15% before moving lower, maybe not as high. You can see Thungela sold off 8% today. So yeah, something to keep an eye on. But like I said, ultimately, I think it's going lower and I will become a buyer at lower levels. Now, quickly, let's move over to Exxaro. Have a look at the chart of Exxaro. Same thing. I've been trading Exxaro for a while. It's been a nice area, nice stock to trade, a nice stock to hold. And the bonus is the dividends that they've been paying. Same as Thungela, like I said, over 20% dividend yield, closer to 30. Exxaro has come down a little bit, obviously because their earnings contracted. They didn't export as much tonnage as previous quarters, so that's affected the revenue a bit. But ultimately, Thungela is more of a play on coal, cash machine, strictly basically on coal, where Exxaro has more of a diversified business. So potentially that could be a safer bet, but obviously the higher the risk, the higher the reward, which you've seen over the last year and a half with Thungela. So quickly on Exxaro, you can see we had start go back to 2008. You can see these areas of interest where the stock hits. It's like hitting a roof and you can't go through it. And the natural thing is to come back down and test areas where there was no price action. So it comes back into those areas, which is healthy because it builds a base before it moves up to the next level. So ultimately, you want to be seeing higher lows each time to show you that the business is growing. And if the fundamentals are matching what you're seeing on the technicals, then it makes sense to take a position into the company in a strategic point. So technicals, it's just drawing lines on a graph. I don't really use indicators that much. I use them to sort of supplement the ideas of where I want to take my trade or try my luck, or it to help me take positions in long-term stocks or long-term plays that I want to hold. So for example, you can see we've got Exxaro hitting a double top, basically. So there's a bit of pressure here, and we have selling pressure. So if those of you that have been watching Exxaro, you might know that it's been quite a ride too. So we sold off, we got to close to 240, came back down to 180, and we retested that top again. So you can see we up there in that double area, strong resistance, and it's fighting to stay up there. The question is, will it break higher? In the short term, from what I'm looking on Thungela's graph, Exxaro's graph, what's happening to the coal price, what's happening globally, what's happening with the overall market, sentiment is pretty bearish. So based on that, I think the share price will come down, pull back, give up some of the gains. But either way, even if it does do that, which is healthy, as mentioned, as long as the stock is setting higher lows each time. So let's say the stock does pull back into this area from 2008. You can see that point of interest over here. Hits the resistance, sells off, breaks it, tries to hold it, can't hold it, comes back into that area, sells off the pandemic, well, not the pandemic, that's 2016, comes back into that area, strong resistance again, sells off, finally breaks up past that resistance again. And I think we're probably going to test that area one more time. So for me, ultimately, I want to be buying Exxaro again, around about 155. For me, that's a good level. Now, you can see that predefined channel there where it's setting higher lows each time, and it is setting higher highs. Obviously, what we are seeing here is sort of a double top formation. So something to be just to keep your eye on. You can see when the chart starts to roll over, if it does roll over. So ultimately, you want to continue to see this trend. If this pulls back in, it's a perfect buying opportunity for me. And again, it doesn't mean the stock's going to stop at 150. You never predict the bottom. You can always overextend to the downside, or you can overextend to the upside. The idea is to manage your risk and enter at certain points you feel more comfortable. So I would feel more comfortable just sitting in cash, doing absolutely nothing, waiting for, let's say, the stock to come back into this 155, 160 zone. Like I said, it could just overextend, mad rush down, but that gives you an opportunity to buy a quality company at even cheaper. So even if it had to overextend downwards to that area, you're still setting, basically, people will just change their trend lines, say, oh no, the stock's still good. You know what I mean? Ultimately, you're still setting higher highs. So it's not like, oh, that's the line, that's where it's going to stop. So it's just the guidance to help you take the position you want to build in. So something to take note of, also something to put on your watch list, keep it and watch it and see what it does. Now, between Thungela and Exxaro, which one is the superior stock? Obviously, it's a difficult question to answer. The one is more coal orientated. They're both coal orientated, but the one is more reliant on the price of coal than the other. So Exxaro is a little bit more diversified, has other commodities in their company that can generate revenue. So you've got a bit of a head, like a you've got a bit of safety. All right. They're both cyclical stocks. They pay dividends. So timing is everything too in these for the long run. But I like them both. I plan to build positions in both of them. I do own Exxaro at the moment. I've been trading Thungela because the levels have been pretty good over the last week and a half, 2 weeks, going up to 320. Now it's back down again to 280. So that's what I'm thinking. That's what I've shared with you now. Let me know what you think in the comments. If you own any of these stocks, what do you plan to do with them? Are you looking at anything else at the moment? And just share your strategy. I'd love to hear from you. And then we'll end the video there. Again, thank you for joining. Please don't forget to like this video, share this video with your friend, and I'd appreciate a comment too. All right, so I'll say goodbye and I'll see you in the next video. Bye for now.